Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, today is the day, Friday. We've had a lot of volatility, especially in the bonds this week, and it all culminates in this, a non-farms. And it could be one to remember. I don't know. Sometimes they are duds, but this one, I really get a sense that it is highly anticipated. Actually, no, we need different music. Let's do like some drum and bass or something. Come on, give me something a little darker. There we go. All right. Let's go to the charts. If I can find it. There it is. All right, so for the treasuries yesterday, we had a pretty decent move up again. There was a Bank of Japan news like overnight, but then again after our session. But you can see here today, they are in the overnight session. They've basically retraced all of that. We're basically back to a little bit below where we started yesterday. S&P 500 rallied and held it yesterday, but again, this is probably just volatility compression. Oil, actually, well, I guess it wasn't an update yesterday. Maybe by the end of today we get an update in oil. We'll see. We'll see. That one has been, it's been confusing to me. Okay, gold and silver still kind of holding the range. Kappa actually getting a win yesterday. Here's the big spike you saw yesterday in the Japanese yen. Oh, mama, that was a big move. And the Bitcoins just kind of holding their gains. You know, I have this volume profile on Bitcoin. I don't know why. It doesn't accomplish anything. In fact, I also probably have to. Oh no, I don't have tick replay on. Okay. All right. So, oh yeah, when we come back over here, the dollar. Have the dollar down in the bottom. And the dollar, you know, it took a little bit of a hit yesterday. So that's where we at. I did good today on getting ready. Like, I'm bright, nice and early and everything. I'm feeling pretty good about this. Okay, so GWE asks, the forecast is 148K. Yesterday I said the actual will be equal to the forecast. I'm still going with it. The LA trader asks, are there any good guesses on the job sector? Okay, well, so as GWE notes, the expectation is 184. There is a pretty wide range of expectations, some in the higher 200s and some like 50,000. So Goldman Sachs, who has been a little bit more optimistic than some of the other banks, was predicting like 234. And their theory was that there will be more jobs coming back from auto workers striking coming back. And so the number will be higher than anticipated. And this kind of sets us up an interesting thing because I think that we are more likely to be better than expected than worse than expected. Okay. Which would be just absolutely contradict everything else that we've had going on this week. ADP was a lot lower than expected, but ADP has not really been, is not really indicative of what it's going to be. And then we had JOLTS, but that number is just BS anyways. So I still think you go along with the things that predict the non-farms, and Coleman says that it's higher than expected. Now, the other issue, though, is that if we get a little bit of like better growth than anticipated, I think that a lot of economists are going to say that what you're looking at is not really mean what you think it is. So if we get a good number, I think that there is a risk that you see a really big knee-jerk reaction, but that they give a lot of that back. Okay. Also, if we get a better than expected number, you're probably going to see the treasuries go wild, because the treasuries are sitting on positions that are just like way out of kilter with what the Federal Reserve has said and everything else. Now, if the number is less than expected, the thing that we're going to want to watch is how the S&P 500 reacts. Does the S&P 500 finally turn into bad news is bad news? Because if we get a bad number, it would suggest to me that we are going into a recession. So that would be a reason to sell stocks, right? If we're going into a recession, that hurts earnings. It doesn't matter that free money is coming. You buy that later. That's going to hurt earnings and everything else. So that's the key thing to watch is, does the S&P 500 actually sell off, or does it turn into buy all of the things, which I think is entirely possible, but would kind of be like throwing a party at the worst time, you know? So what we got about 4 minutes until the news. I am not even going to toy around with, taking a sim trade on this or anything like that. After it's released, maybe 5 minutes after it's released, we can take a look and see where we're at. All right. But I don't even want to joke around with it, because this move really genuinely, this upcoming news really genuinely scares me. It could completely shift the entire market on one data point. Any other guesses? Well, I tend to agree with the Goldman analysis. They're not always right. They're definitely not. But when they are right, I've gotten really good edge from it. So I'm going along with, I think that it's going to be higher than expected. I'm going to try blowing my nose here. Oh, yes. So one other thing. We're only talking about that headline number, but the unemployment rate is going to be really important too. If you get an unemployment rate of 4% or above, then you start to get into some of these rules and past patterns that basically say that when unemployment has increased yay amount, that you're likely to get a recession. So a lot of economists are watching very closely at the unemployment rate. Okay. Unemployment rate consensus expectation is 3.9, in line with previous month's reading of 3.9. Okay, well, 1 minute. I tell you what, that was like the fastest 10 minutes of my life right there. Talking about that. It's coming up here. I'm gonna make sure that I don't have anything up. Okay, I will put these over here just in case. 30 seconds, get ready. Okay, they shoot down. I haven't gotten the number yet. 199, slightly higher than expected. And the unemployment rate ticked down 3.7 versus 3.9. I'm waiting here for average hourly earnings. The U.S. average earnings month over month spot for that is hawkish. Oh, they are selling this. They are selling this after having spent so much of the week at or above 111. We are headed right for 110. Did I not say? I mean, look, it wasn't that big of a beat on the payrolls number. But did I not say that, like, the most ironic, juiciest, entertaining thing that could happen would be for the number to be higher than anticipated? Good for the dollar. Oh, yes. Look at the dollar just skyrocketing above 104 there. So this is wreaking havoc across markets. UB is down 1.36% right now, which is already, like, the days that we had that were really big on the up were like 1.3%. That's a big move for UB. The only thing that is really up right now is oil. Oil does not seem to be too affected by this, but everything else is getting hit. How far? ES down spot 3-4% so far. And a pretty decent, like, suck back up after that move. So this would be okay. So let's start playing this on sim. I'm going to be a little bit more light here at the start. Might be pushing it with this limit order at 07.5. Let's see. But liquidity is pretty light, so... Okay, so the swaps are now pricing in less easing in 2024. We'll see. I mean, sometimes that spike is the low of the day, right? And me trying to take this trade is ill-advised, but I'm playing it. That's why I'm playing it on sim. I'll wait 5 minutes and maybe we can think about pulling out our live account. How much sold? It's about 30,000 contracts sold into that. That's definitely non-farms types numbers. Let's come over here real quick. How does this look on the volume profile? Well, actually breached like lows of the week. What do you know? I want to know what that does to my options. Does that bring me back to like break even on my options? You know, if the Federal Reserve is hawkish next week and the treasuries sell off on that, then maybe that trade is actually going to turn out for me. We'll see. Okay, a pretty decent amount of volume trading at 06 here. There's some spots here on the DOM that are have 2000s on them. I'm a little surprised that there's people willing to put that liquidity up. I would like to, on my live account, take a reversal trade here. That maybe they get back to like 4-3. But so far, the flows that I'm seeing don't seem to be in line. I'm going to clear my current trades here. Yeah, for some reason, I won't clear that one down there. That's okay. Nick Timmeros tweets, so much for that 2023 recession. The unemployment rate ticked down to 3.7% in November from 3.9% in October, and employers added 199,000 jobs last month. The 3-month average private payroll growth has slowed to just under 150,000 jobs a month. Bob Iacino, he tweets, zero chance the Fed eases in March with payroll numbers like this. I agree. I think that from what I'm seeing here and everything, this could be a number that could push them all day. I think that the treasuries could go lower. The question is just how much are they going to pull back first? They might be able to pull back to 40. So if they get to 40, that's where I will add more. And they did kind of sputter out there a little bit. Liquidity in the micros still doesn't look super great. Don't fight the trend. Well, which way is the trend? I mean, so what I see right now of the cumulative delta is pretty flat in the 10-year. When you look at the others, they are actually continuing to sell. So the trend is actually still very much down. Just want to note that. Oops. Recenter there. So those offers are getting a little bit stronger, aren't they? Okay. Oof. Okay, interesting. So we're getting some bigger trades coming in here now. Pushed them down, pushed them back up. I clicked in when I saw a little bit of volume push down. Now I'm trapped. And what are we seeing? Dollar coming back here. Dollar coming back here. can see the spread is narrowed a little bit. Maybe I should have waited for the 14. So I think that the market makers wanted to get to 114 to 14 so they can kind of rebalance a little bit. You can't see a reason for your short? So the reason for the short over here is on the theory that the market's pricing for interest rates are way too high, and we just got a piece of news that shows that very, very clearly to the market and is creating selling. And I think that after a brief pullback that they will go back and revisit those lows. Why that price? Because that's what the price was at the time. So they had built a little bit of volume out there. So that's why I kind of thought that maybe that was an area that I could play around with. But you're kind of seeing that it's still pretty early in this and that that's maybe not the case. Right. But I think the thing is on these really big ones, and the thing that makes these so hard and dangerous to trade is that you can't really expect to catch really accurate turns. Like yesterday, we caught one that was almost exactly like it never went against us, right? Can't necessarily expect to catch those. So you're just going to be very slippery. Mohammed A. El Arian, bottom line positive for the economy in terms of jobs created, people entering the labor force, and wage growth. Having said this, and given yield moves of the last few weeks, a trader are likely to see the hotter than expected average hourly wages and job creation is putting more of a question mark on the aggressive and early rate cuts that have been priced into 2024. I should note that I am seeing a little bit of steepening coming in here. The 30-year kind of wants to pull down while the 5-year is still pushing. Yeah, it is a wide range between 06 and 14 for sure. Like for this trade, for this sim trade, I'm going to have to hold a lot more risk than usual, right? Well, they tickled it there at 14, but only one contract got filled. And you see the 30-year is still lagging. Like, when I look at the 30-year, they're still selling it. So, if we get the move that we want, this will be really good for the trade. Because it means that the 30-year is probably going to sell harder than the others and push our micro 10-year up faster than it normally would. Oh, sure. But dude, like in a non-farms like this, you may have to sit through like 16 ticks of adverse excursion. Just because it's so volatile, right? So I would almost never trade this live like that. Never trade a position like that live. Okay. Still no fill at 14, and they're coming back down to the 12. And in fact, I'm starting to see a little bit more selling in the 10-year there when they came back. I guess that's also why that here on this sim account, I have to average in, right? $30-year got pulled down there a few ticks. Looks pretty slippery there between 12 and 14 still, actually. Now the S&P 500, they retraced it. Interesting. So for the S&P 500 is good news, good news. But that just makes me even more adamant that, like, the market pricing for treasuries does not make sense. 4.25 does not make sense. Okay, so they did fill me there. Oh, didn't I have a... Oh, whatever. Okay, that time, by the way, the 30-year got dragged along a little bit with it. The spread is still steepening, but they got dragged by the 5-year. One thing I should note is that if they're taking a steepener trade in here and they're like buying it with the 5 first and then they're going to sell with the 30, that could be part of what's going on here. Wow, but I am underwater now on this trade, like, big time. Okay. Big order just got put on there at 16. Oh, whoa, what the what? Just enjoy the ride, boys. Just enjoy the ride, all right? Mr. Bond says, Seth, you're going to have to puke. Maybe I will, but I tell you what, somebody already just puked right there, I think. Puked and then it came right back. Well, a big thing to note here is that the dollar has also retraced its move back to 103.8. And if it does appear that the dollar is probably a significant factor in all of this, so if the dollar bases here and then starts pushing back up, that could be good for us. And if they start dropping lower, that would be a very interesting development that would also very much affect our position, right? Okay, there's a big order at 119 even. We should expect there to be liquidity at a round number like that. But in this situation, it's a little bit odd. Just because we just touched that, right? Okay, Brannigan Barrett says the soft landing narrative is about to go into overdrive mode and cue the S&P 500 to hard bid into here and perhaps. Okay, sellers may be making some progress there. Although there's still like that 119 even in CB is still going to be a roadblock, I think. And over here in ZN, it's going to be that 14, right? Okay, well, there was a little bit of volume there, 2276, but not too much, and they sliced through it pretty quickly. And another 1,000 at 13.5. Okay, now I find this curious. The amount of volume that we are trading as we sell here in the treasuries, there's actually been quite a substantial increase in volume here. For instance, there was an iceberg 47.53 at 12. Again, the market order sliced through that very, very quickly. So you definitely got enough fuel there that trend down could continue, but it is just, I think, really important to note that we just switched very quickly from a market that was very, very loose and slippery, and now we're starting to see a lot more absorb, at least on the bid. I guess the split side of that is some might see that as absorption, passive buyers trying to create a base, but I think that, well, like this area right here was kind of our support from before, so probably if we're going to get real selling here, you need to push a little bit further before you start to see people puke and so forth. Cumulative delta in the 10-year is still pretty much flat throughout this whole pullback. Okay, well, there was an aggressive 2 ticks. I'm very, very close to my orders right there at 09.5. 5 years seems to be coming into something right here. Okay. So now some back and forth here around the 20. Click on that one. I think that click was over in the E-mini though. Oh, no, it was over here. Ask pulled at 12. No, I don't like that. The dollar is coming back here, though. And I would say that the turn in the treasuries does match up pretty closely with the shift in the dollar. The treasuries also are matching the Japanese yen very closely again, which I find interesting. I would kind of have thought that they would continue to be somewhat decoupled, but the 6J actually on this pullback, the high of this pullback on the 6J is well above where they started, so well, I don't know if this short is actually going to work out, but it seems like you're going to have nerves of steel to hold it if it actually is going to, right? Well, I didn't like that uptick right there. No, sir. A little bit too much there, and now that they're hitting back into it at 12, there was a little bit of an iceberg there. 32.74. Nerves of steel. Nerves. I feel like I'm a little bit too lazy in how I speak, and I've been trying to enunciate more. I do a good job of that when I'm reading, but not when I'm just talking to you guys. I don't do a very good job of like putting any context on what I say. Like I know that you guys are with me and you've been listening, and so I assume that you just know what's going on, right? But if I was to try and like edit together a video or something like that, a lot of my comments wouldn't really make sense. Okay, now there's an iceberg on the offer. Big iceberg on the bid too. This is very curious. I am seeing selling in the 5-year. This is interesting. So after steepening, let me show you. After steepening from that initial move down, the retracement, the yield curve completely retraced that, and now they are flattening back out again. So we are kind of starting to get some flow in that. It's not as much as I would like yet, but it more in line with a retest of the lows. Haven't touched those orders that I've got down there at 09.5 yet, though. I love your accent is very similar to a Croatian accent. If you learned Croatian, you would sound like a local, especially the way you say the word not. It sounds like N-O-A-T, not, yeah. You know, that's something that I picked up from the news squawk, because on the news squawk, they don't say point. They say, not or whatever. Spot. Oh, spot. Say spot. I guess, never mind. I was talking about something totally stupid. I'm still seeing volume here, man. I'm still seeing volume here. I would like to see the 30-year sell a little harder, but so I'm a little disappointed that they started flattening again. But, you know, take what you can get, I guess. At the same time, there was a lot of volume at 11 and everything. That's probably going to create a little bit of a liquidity hole. And it has been sitting here in a 2-tick range for about 3 minutes now. We may be stuck in that kind of area, right? Like, there's a good possibility that they sit in this area between, let's say, 10 and 13 for the next 15, 20 minutes. And then maybe when they're getting ready for, like, the E-mini to open back up again and maybe the liquidity has recovered a little bit, they might start to get a little more aggressive again. But I also wonder, having the big volume show up in here so late, if that kind of delays all of my time scales back. Or not. On the other hand, it may just be dollar correlation, and if the dollar continues to buy, then we may just see the treasuries continue to push and eventually see the treasuries get dislocated outside of this range. There was a few good ticks. A few good ticks. It's not a few good men, it's a few good ticks. Right. Some ideas for the writers when they decide to make a movie about us. Because again, 2813, 3000, 10.5. Might be a 5,000 there. Nope, 35. But not much of an offer following that. Nope. So if there's a liquidity hole at like, let's say the center of it is 11, market sellers are not showing a whole lot of insistence yet. That's a little better. Okay. And the fills. Which brings my cost basis, well, my average entry all the way up to 14 now. Oh, actually, you know what? That just was from the last one, so that's not good. It's actually my break even at 10.5 now. I would like my break even to be a lot higher than that. But if I can get this fill at 07.5, man, I mean, they are still pushing through relatively large orders to make this move down. And like I said, the dollar is moving. So it looks like it is more the dollar more than anything that's driving the treasuries at the moment. Japanese yen is getting creamed. Oh man, that bar in the Japanese yen looks really ugly. And the gold is really getting hammered. Well, I guess gold is, you know, gold above 2,000 is still a win for the month, right? But they are getting hammered pretty hard here in gold all of a sudden. I mean, it was down before, but this last swing down really, really, really pushed gold. What about Bitcoin? Yeah, Bitcoin hasn't really done anything too interesting off of this. Yeah, of course. Of course not. They only manipulate it when they have some reason that they think they can make a move to try and bring more people in. They don't. Doesn't actually respond to real economic conditions, Bitcoin. Well, that's a big order at 08. Some defense. They know I have that order there at 07.5, and they really want to prevent me from getting filled on it. Watch 06. That's interesting. Why do you say 06? Okay, Octavius. I trust you, man. I trust you. We'll just see. Now we're seeing some icebergs on the offer. That one's a 5K. They do get through it. One thing I can say, with there being a lot of icebergs in this whole range, starting from about 13, I would say, is that they get filled pretty quickly. Like, there are more than enough market orders both sides to fill these guys. So, for whatever reason that those guys are executing both directions, I bet that they're probably pretty happy with the market action so far, right? It's just a very, very interesting. So the resting liquidity is still 2000s, nothing too great. Okay, there was a little bit of a shift there because the dollar moved, right? But I just find it curious that in a situation when I would have expected the liquidity to still be a little hairy, that we're actually getting really solid market liquidity now. There seems to be some really big hedgers out there on both sides doing something. And I can't really explain why those orders are there. It is snowing here in Utah today. For you on the eastern coast in the United States, apparently this snowstorm that I'm experiencing right now is going to turn into a pretty aggressive trough and drop some big snow in certain areas. So keep an eye out. So far, it's been pretty light, but the snow is very much sticking. So it's driving out there is pretty messy right now. Okay, so let's see what Jason Furman here is saying. What are the chances that inflation reignites? I think about 25%. Overall, this suggests a bit less recession risk than you might have thought, which is still enough to be nervous about, and a bit more inflation risk, but really only a bit of each, with a soft landing dominant. Nominal wage growth picked up a decent amount, but note it was really low the previous 3 months. Over the last 3 months, it is consistent with what you would expect with a steady rate 2.5% inflation. Over 6 months, more like 3.3% inflation. Well, I do think I have to go back to some of the things that we were saying at the beginning of this stream. Remember when I said if we do get a better than expected number, you're going to see a lot of economists try and, like say that this number does not mean as much as we might think. And perhaps that is reflecting a little bit in the market's reluctance to really aggressively push on the short side. And yeah. But I do think overall the treasuries, and maybe it doesn't all happen today, but I think that the treasuries have quite a bit more selling to do here before they're really in line with what the Federal Reserve thinks. So for instance, if we were to end the week where we're at right now, the Federal Reserve's got to be saying, like, we have to come out kind of aggressively against this for the Fed meeting, you know? I would be betting that the next Fed meeting would be hawkish. But who knows? I don't know if the Federal Reserve thinks of it that way. Okay, more liquidity here at 10 and 10 half. Oof. Well, at 3K iceberg at 10, but then after the 10, they slid back down to 09 half very quickly, so. Oh, wow. Yeah, because the dollar just came back with a vengeance there. Look at that. Well, this is why that's a perfect example of why it can be very, very useful to have a chart of the dollar up there. Because that kind of shows us why all of the sudden that the market makers hold their bids there was the currency correlation. And, you know, if it's the Japanese yen selling, could be plenty more of that out there. Does seem like the treasuries are trying to fight it a little bit, though, don't you think? Okay. Ask pulled that time again. So I've seen some, like, you know, quick pushes down pulling on the bids, but they weren't like 1,000 lot pulling. I've only seen 1,000 lots pulling on the offers. There was one bid that pulled and then stacked and pulled at 07 at one point, but that was it. Well, this one down here is starting to give me flashbacks, because what I'm seeing is I held on and it did come all the way back to my cost basis, to my break even, but then they seem to be unable to push very far above that. You don't think the bond market will push down very much further? Well, we certainly have to consider, with the way that the liquidity has been, that the downside may be more limited than I would like. But it's kind of a tough call. Sometimes you can see something like that happen, and then it just all of a sudden turn down to selling again very quickly. Like, those kinds of conditions can shift very fast. And on top of that, if we were like a large firm that had a lot to sell, right? You'd want to be very, very careful about how you sold it, because, you know, after that news, the market is already pretty unhinged. The liquidity is already pretty iffy, right? And so I would be waiting until at least 45 minutes, if not more than that, before I would really start executing my consistent sells. So, you know, we could still get a meta order short. At the same time, if I was one of those big guys, I would hope that I would have taken advantage of some of the liquidity that they've put up here at 10 to sell. Yeah? Okay, dollar still looks like it's pushing. Also, yield curve still flattening. Let's recenter things a little bit there. What about the E-mini? E-mini looks incredibly unclear and difficult to read at the moment. Yeah, I wouldn't want to be an equity trader right now. Okay, so now I'm getting a little bit of back and forth here. 09 half, but it's not the same stuff. This one is maybe kind of more noise coming around from the correlations. I'm not seeing the same amount of like big orders that we had before, and it is getting a little bit slippery too. Now look at that, two ticks up, tick back. I think part of what's happening here is that because you are getting the flattening, the 30-year is kind of sticking up there a little bit more than the others. All of these yield curve trades are making it very difficult to read. I don't know. When we were seeing big icebergs here in the 10-year, I don't recall seeing other big orders over in the other instruments, though. You got out. Well, it looks like my opportunity to get out at break even is past, and now they're squeezing me again. Break-even point for market makers is still there at the 14. Iceberging at 12. How big is this one going to be? Dollar did pull back there. Like I said, the dollar, they made a big move there, but the treasuries didn't sell nearly as much as the dollar bought, right? Didn't sell nearly as much as the Japanese yen sold either. Okay, they take out the bid iceberg at 12, but only briefly. I wonder, now that we've seen the yield curve flatten back out to its pretty close to its flattest since the news, if they go further or if it starts steepening back up again. Let's see, we're back to this same spot. Let's see if there's pushback here or not. Yes, maybe there is a little bit of pushback. Dollar's still kind of chopping around there at 104.1. Okay, another iceberg. Pushed through 4,000. One was a little bit more aggressive, but and 13 is going back and forth a lot, though. There kind of seems to be a little bit of a floor here at 119.04 in ZB. Nobody's touching the L3. Okay, there you go. There you go. Big offer showed up there at 13 on that down tick. This pullback has been across the board, so I'm not detecting anything in the yield curve yet. So here comes the dollar again. Here's where now we're getting into the time period where, you know, if sellers wanted to be more aggressive, maybe they would start showing up, but so far we haven't seen them. Not gonna trade anymore today. This threw me off my game. Well, yeah, today is one of those days where it's gonna be a little wild. Oh, your dad wants a new TV? Oh. What brand of television are you gonna go for? I kind of want to buy a new TV, but I think I'm gonna wait till maybe this summer. The decline is looking pretty okay. I would love to see more market selling off of it, but oh, he's gonna go with you and choose. does seem like these moves are a little bit more based on correlation, which, by the way, the dollar is pushed back up to the higher end of its range, but they just bounced off of that ceiling a little bit. So we'll see if they really want to go for it or not. Gold is still selling. Oh man, is gold selling? How much is gold down now? Silver is down 2%. Gold is down 1.2%. And then ZB or UB down 1.12%. Don't understand anything that happened this morning? Well, I think it's probably a lot more simple than you're making it out to be. We got the economic news. The numbers were better than expected. That really hurt the narrative that the treasuries were selling, that we're going to have rate cuts in March. So interest rates rose and all of the treasuries sold. And then everything since then has just been random activity inside of a liquidity hole created by the news. Any suggestions on where to get an understanding of me? I think the best thing, if you haven't done this before, is go to forexfactory.com and read the detail of every economic report that they list on there, at least for the United States. And then go and click on the link and read the last report for every one of those. And if you do that every month, I don't do that every month, but I do try to read them. And you learn a lot about the economics from there. And the thing is that then when you're reading these numbers and then you're on CNBC and you hear people talking about these numbers and then you know what they were, right? So it's once you hear other people doing analysis of the macroeconomics, when you have your own opinion, that's when you really start to learn things really quickly. So the dollar is still kind of pushing up, but the treasuries decided to revert back up another 2 ticks again. 44 viewers today? Yeah. That's probably because I'm in a position that's kind of being a little fraught. Right? People like the drama, I guess, or maybe they're rooting for me to lose money. So here again, I'm not seeing huge changes in cumulative delta. Did see a pretty significant amount of selling in the 5-year on that last move down. But now we're kind of into like another pullback sort of a thing. So in fact, are they going to get above 14 here? No, I didn't get my fills on this side. Where did they get down to? Oh, they came so close to it though. They've decoupled a little bit, the dollar and the treasuries. So you see how now the dollar seems to be coming back down, but the treasuries moved up before that dollar started doing that. So I don't know what that means. I don't know. When I look at the ZN chart, it just looks like a mess to me. When I look at ZB, I see a slight upside bias. And when I look at ZF, it just looks like very clear consolidation around right about where they're at right now. Although the center of the volume profile is O2. That's curious. Now here's the S&P 500 open. Well, I tell you what, when we started this stream, there was like the first 10 minutes before the news came in, and I felt like that went through in an instant. And now this last hour has been like one of the longest hours of trading ever for me. So much volume we've watched in here. And you know, I feel good about holding it through some of it. I think I should have taken it off the last move down that we had. But in the end, it's probably all random. It's a good question. Too much. I really try to avoid setting like a hard number on here, but instead trying to, if I see something in the flow that really contradicts the trade or something like that, I'm not really getting that, am I? Like, I think that I've been sitting in this long enough to feel that we're not getting the flows that we want. It seems that there's too much flow fighting against it for whatever reason. The dollar is coming back down here, so that's not helping. Gold maybe finally found a floor. A part of me feels, though, that this is still just them trying to squeeze all of the shorts that they can out so that they can then go and make a beeline for the lows later, like after the European close or something like that, I suppose I have to consider how much of this is profit taking. I wanted to keep it centered there at 14, but it seems to be hanging out more at 15 now, so. Not as much of an iceberg city as we had before, though, is it? You can't. I don't think you can. I'm told that there are some exchanges in China that have like 5-minute open interest data, but not in any of the markets that we have access to my knowledge. But the only reason I brought up like the open interest data was because there have been studies run on those exchanges in China where they had that information that kind of suggested that there was some efficacy to looking at the open interest information. So I think in situations where there's enough context for you to get a kind of a good idea of what the buying and selling is, that it is to your advantage, that it would help you. But in a situation like this, cumulative delta has been flat through most of this. So can you really make any kind of a call or interpretation on any of what's been going on here? I'm not sure you really can. There's a little bit of, the treasury's settled back down here to 14. But the 30-year did not really fall back down with them at all. And maybe some bid iceberging at 14.5? No, only 2,000. Okay. No. Okay, well, there's 14. ZB's still not coming along, though. Oh, and the other two just get dragged back up to it. Fuck. I'm seeing more selling in the 5 again. So maybe they're going for flatter. This is where, you know, I find what the yield curve does in situations like this to be very, very difficult to predict sometimes. You know, like I might be able to say when it's all said and done, this should result in a steeper yield curve or a flatter yield, right? But like how it gets there and where the turns are and which way, it's just, I don't know. I don't completely understand why they go. Probably because I don't really understand what the positioning in the yield curve is sometimes. You know, like we're people taking steepeners ahead of this news, thinking that the news was going to be in line or worse. Dollar maybe turning back up a little bit again. I don't know, after all of that, do I really expect the dollar to like just shoot out here and start pushing to new highs? They're still not able to get the 30-year to sell either. Like nobody's hitting 07. Maybe the 5-year just needs to push a little bit further and you'll yank them down. Nobody trading 06. Okay, there it goes. There it goes. And some stops at 05. Talk to you later, Jewy. Okay, we can try recentering again. 14 is... Oh. So the break-even point for buyer market maker now is 11. I don't know if that means anything in this situation. I've kind of never seen this sort of a situation before where it's a big sell on the day and then over time they do get back above that number. Usually they just kind of like ride that area down through most of the day. Some calls being bought that expire today in TLT 50 cents out? Really? That doesn't make a whole lot of sense to me at all. Other than maybe as a YOLO play because it's cheap. Yeah, and they recover the 14 and the ZB, even though it ticked down one tick, they're not able to get very much out of that. And the dollar stumbling back down to 104 even. Wait, and I am starting to see now pretty slow but steady from the past hour meta order buy. Well, that's interesting. All of a sudden, a lot more selling just came in there and hit into an iceberg. And when they try and push it back up, you actually get offer iceberg. We retrace the damaged liquidity they clean up. Which damaged liquidity? I mean, I feel like at this point that the market should be pretty recovered. With the caveat that maybe this volume that we're seeing right here damages it. You know, you saw a flurry of activity there, and now all of a sudden the flow has really died down. Well, buyers win that one. I heard a click. And that's the ES. That's the ES because they're pushing highs. Yes, I see. 18 to 21. Well, okay, yeah. If they got above 18 to 21, that might be an interesting breakout, yes. Okay, I'm out. I didn't like that we had another volume cluster there, and that it seemed like it was so easy for the buyers to bid it back up. I'll keep on this sim trade, but for the live one, no. Seeing a rise in Bitcoin here. It's going for another run. Well, let's come back. Maybe there's some, you know. Like I do kind of feel that there is a bit of this number doesn't matter sort of stuff, right? It's turning. What are you talking about? I think he's just trying to mess with me. I think in order for me to try and maybe get back in this or adjust my thinking, that I need to see this meta order buy get broken, you know? So just as an example right there, we fell down a pretty good clip, and then somebody bought up everything that was there on offer, 2 or 3 ticks. Yeah, meta orders are resilient in nature. And I mean, when you look at this, I need to really zoom in here. Right, that's a pretty persistent move up, right? It's a pretty persistent. This one is really looking like they're just reacting to Seth though, because it did come back down a few ticks. I'd still be down like 15, but well, that is maybe actually And which side? The 5-year continues to be a sell, though. And that's the other thing, is that probably I should have taken it over here in like the 2-year, right? Okay, now that tick down was a little different. So a lot just happened there. Counterfactual regret minimization. That is a term I have never heard before. That sounds interesting. Oh, that's right. We still have the University of Michigan data today. Well... I think that we've been seeing inflation expectations rising in that survey, and I think there's a good chance that we'll see it again. So I think that number could actually bolster rates here. My face, I'm starting to feel it in my face, so we got like 10 minutes left for this, but I think that I gotta be careful about if I have another setback. That's probably like going into tilt. So definitely doesn't look like the story's over here. There was a little bit of a breakout there. Trading data, how you feed into it, how you clean is more complicated. Well, yeah, because I mean, honestly, especially when you're talking short time frames, right? Most of what you're looking at really is just random, right? For instance, just here in the treasuries, it's not until I step out and look at like the last hour that I can see, oh, actually, there's been like a very subtle meta order buy in this. Probably because they're like selling the 2 and buying the 10. Except for that the 2 and 10 has been steepening a little bit. And it really is over in the 5-year where they've been selling. I'm a little tempted to add to that, but don't want to do it just before news. Curious that I still have not gotten fills at 10 though, huh? One of the things I'm noticing about this area is that when I'll see a big hit on the offer, I'll see a corresponding big hit on the bid immediately afterwards. It's like they go badoosh, badoosh, right? Even though this time it was like 1,500 and 500. It's like there seems to be a counter reaction to everything all of a sudden. There's also some things where like it was really sensitive for a bit there, and now they're not as sensitive to those ticks. Spread is a little tighter. Okay, there was a big order just kind of slipped through there at 11, and there was an iceberg there. There's a relatively large bid at 10.5 as well, kind of protecting that 10, saying, nope, Seth, we're not going to let you get... How many times today has it been that wherever my bid is, there's a big order in front of it? I kind of feel like that today is one of those days where, like, I know that the orders haven't been in line with the fundamentals lately. This is a piece of news that could really jolt them back towards the fundamentals, but it kind of feels like that the longs are refusing to capitulate, you know? Like, this isn't enough to flip CTAs around. I guess it's not enough to flip CTAs around. I do think that we were getting a meta order long, and that about 10 minutes ago when we started to see the volume moderate a little bit, and that was probably the meta order was complete. So what we're seeing as maybe slightly more bearish action is actually just post meta order regime change, right? I am starting to see some of the liquidity pull a little bit early for this University of Michigan news, so I guess they're saying that that's going to be relatively significant. Well, look, so University of Michigan is one that I'm willing to put a bet on. But them pulling that early makes me a little nervous about that now. They're really pulling. And the micros are pulling. Yeah, I don't like that. Somebody seems to be taking that opportunity to shove it up a little bit. And this is where sometimes people dink around with the low liquidity that you get ahead of these. I think that's what you were seeing right there. Okay. Ooh, shit. I might be getting lucky here. Okay, 1 year was... The expectation was 4.3 and we got 3.1. That is a big, big shift. And what was 5 year? 2.8 versus 3.1? I mean, it's coming back very quickly, but... One could argue that the buying that we saw ahead of this was in anticipation that the inflation expectations would come down and that they are now taking their profits. Because that came back very quickly off of a number that I would not expect them to trade it like that. And what's the dollar doing here? Wow, the dollar's all over the place. I mean, I think that that's kind of like good for the dollar in the long run, right? I am tense, man. I'm definitely tense. Can you see it in my face? Because like I said, I'm starting to feel it in my face. Good grief. It was kind of funny. I saw some retail go in here in the micros to buy it, and then immediately it ticked down. Let the math play out. No. Shit. Okay, so another wave of buying came through there, but they're giving those gains up really quickly. That's very odd. That's very odd. That's very interesting. So you're kind of getting these like buyers impulsively jumping in and getting trapped and almost immediately bailing. I'm not sure what to make of that. What came out of University of Michigan is objectively bad for my position, though. Also, yield curve didn't make any kind of clear move off of that, so... Okay, I'm getting a news squawk message about the oil strategic reserve buying certain amount. Like, I think they said 30,000 barrels, and I am seeing oil jump up here. I mean, I'm just guessing here. I feel like that push to try and push it even higher, fizzling out so quickly, is a bearish thing. But they're coming back to the 13. They're not pushing through it. In fact, look, they come back through there so quickly. Am I seeing movement in the dollar with this stuff? No. It is just the treasuries. Oof, I don't know. I'm using financial juice for my news squawk. So there was another kind of buying flurry. It did not result in a positive change in cumulative delta that time. And it is reverting back down to the bottom again. They're not out of the clear, but I do feel like that if they start to make more progress on the downside, that this might be something that I could, you know, that could accelerate. I think that they need to be like below 12 before I'd get excited about it, but equity showed a positive. I think that the equity market should like everything that we've seen today, yeah. It's the bond market that I'm like, listen, this rate cuts that you have priced next year, you know that that's not going to happen, right? So I'm surprised to see as much liquidity and fighting it as we have. I really am. I mean, the reaction to that piece of news, I think that makes sense. And I do think that them kind of maybe stumbling after that maybe also makes sense because there's probably profit taking right now. Charts just looked off. Well, I mean, the charts are often just random, right? So the big thing that I would be looking at here today is that we got that big move down, and then there was a lot more liquidity in the treasuries than I would have ever have expected in that situation. And that is very curious. I think that is kind of a sign that the downside for the treasuries is limited right now for some reason. Perhaps because of CTAs and so forth. They still want to buy this. They still want to be long, despite this very clearly saying that the current interest rate expectations for next year are like way off kilter. So, like, I'm thinking, I want to take a trade when I know what's going to happen, when I know that there's going to be big flows behind me. And I feel like that this should be one of those situations, and it's just not turning into that for some reason. I can't believe that after that they're not like, yeah, there's no way that they're going to reduce interest rates 5 times next year. Maybe it was just like, that was a big sell, and that's like all there is to sell out there today, maybe. And, if they're going to come back in line, that it's going to have to happen next week. Or that the Federal Reserve is going to have to jawbone them on Wednesday. I suppose maybe today is going to provide us a good swing position for next Wednesday, but I'm not going to hold something for over the weekend in 3 days. I also feel like, we're in a situation where, like, you should be able to get pretty good order flow reads, and I don't really think that we have been. I don't really think that we have been getting those. We may be in the midst of a buy meta order again, and there's just not enough data for me to see it yet. Because it kind of seems like there is some selling in the 5-year, and they're like not making a whole lot of progress from it. I'll reset it right there because that's the bottom of that support line in the 5-year. The dollar. Oops. Oh, dollar came all the way back there, huh? Ooh, and the Japanese yen is looking good. It's been about 15 minutes. Yeah. Well, they pulled back from the brink right there. It's starting to look more like a meta order buy, though. I've never been, I don't think I've ever been that frustrated on and on farms. That last trade though, I was very much like, I should not have been in that as long. No. When it came back though, like the thing was, is I had the opportunity to scratch it. And when I scratched it, I was like, what was going on was so weird that I really wanted to hold it on and see what happens. I really shouldn't have done that, right? But what I just saw there was this kind of a sign to me that there is still this meta order buy out there. I guess similarly over here in this sim position, I'm just gonna take the minus 600 on that, and you know, I might try and rebuild if there's another something happens. Does that put me at minus 40 today? Yes. Well, I could still take another trade, but I would have to see something really, really clear that like this is going to sell down for me to do that. Are they flattening again? So it seems like the 30 years is pushing it a little bit harder. Yeah, NFPs, I don't know, man. I really thought that the context would have really led to continued selling, but it just didn't happen. There was some things about that first trade that were actually good. I was able to maintain my cool for a really, really long time. I really did give it enough to really gave it the best chance for that trade to be successful. Probably gave it too much room. Taking minus 25 in that kind of a situation is okay, but I would really like to be making like $50 in a situation like this, right? So that's very disappointing. It also makes me think about like next week, because I'm still of the opinion that the rates are way too low here. But I think that this is just going to encourage the buyers, right? So like right there at 16.5, that looks like level break long. Now again, could be this is all profit taking, like everybody got short off of that news and there's just not enough more selling to come, so they have to mean revert. I think that's probably what's going on, but wasn't what I anticipated, not at all. So very frustrated. Okay, well, a few ticks back. Seeing the dollar switch back around again. I still really want it. Still really want it, guys. like the thing is, okay, inflation expectations coming down after having been kind of up last report. That's good. That's good. But I just don't think that it changes the real picture here, which is that there's no way the Federal Reserve is going to reduce interest rates 5 times next year starting in March. There's no way they're going to reduce interest rates in March even. That last one, by the way, what was the most MFE I had ever gotten? Oh, both of these had done 12? Is it 7 and 8? And the long one had actually gotten 12. Huh. Well, there's the 5 years starting to kind of push him back down again. Maybe it's sell the 5, buy the 10. I don't know. I don't have that spread up. There is no growth. Well, I don't know. That's not exactly true, though. I mean, in the third quarter, we saw like 5% annualized growth, right? I wouldn't expect that growth to continue, but we did just have some growth. I mean, the data continues to come out in line with the Goldilocks soft landing scenario. It really does. What we're seeing is most consistent with a soft landing. Oil's still looking good here. It's not like a crazy move up, but they're doing okay. 22 again. Flows have started to moderate again a little in the 10-year, but I'm not detecting like the shorts. I don't know. I'm also kind of questioning if I really traded my plan or not. Because my plan was, oh, if it's positive, they're going to sell this, but then people might kind of say, you know, that this news isn't as positive as it might seem, because it's mostly auto workers coming back and that sort of a thing, right? Okay, that was finally the kind of selling that I've been looking for. In fact, I would say that was probably the best sell in maybe 90 minutes. What do we got? 35 minutes. Oh, their oil goes. They just got, there is a stop run for sure. Did you see that? They just went. So between Triple Witcher and FOMC Christmas, the rest of the month will be blah trading. But I don't know, man. Because the Federal Reserve meeting is so close to the triple witching expiration, that means that there's going to be a lot of volatility priced into next Wednesday, right? See, they did get a sell, but like, look, it comes back so quick. Comes back so quick. Oh, man. I guess this would happen because of the return of JPY was strong, and also there's buying. I've been finding lately that sometimes you will get a very, very subtle meta order in one direction, and I do not catch it until it is way too late. Does look like in the past 5 minutes or so that there's been a shift. $21.5 or 4215 would have been an okay place. Now that we're up like 5 ticks, right? But I'm not exactly what I'm seeing here kind of suggests to me end of meta order and not necessarily counter meta order short. Could happen. I'm still seeing the meta order short in the 5-year. But they have kind of been defending this 13 to 12 area, so we're still not to like the key decision point. And the dollar is just like in here. Do you think that the dollar will come back up? I feel like maybe this is just a little bit too wild and unusual of a situation to have been trading in the first place, is now what I'm thinking. Wait, so was my original thing 4-2? Oh, it was 424. The last one was 423. Are they luring? So I'm not seeing a correlation at the moment. I guess maybe the Japanese yen is selling a little bit, but I'm not seeing a dollar correlation. And I'm not seeing super clear market order volumes. So then I'm wondering, are they luring? Are they actually absorbing on the bid a little bit more than we realize? But I'm not seeing any evidence of that either. So I don't know if I got a really good setup here or not, but kind of looking over the edge and somebody just hit them back again. Am starting to get slightly more signs of possible meta order sell now. Should we test them here? Aha. So that's good. This is starting to turn into a more something a little bit more. Oops. Did I actually click there? Okay. You gotta be careful about that line right there because they're not pushing through that. What appears to be an iceberg at 11.5. Interestingly enough, the treasuries have been selling through here without the dollar coming back up. So okay, I thought that might happen. E-mini turning back down really hard there. Still, the dollar not doing much. Maybe the dollar kind of hinting that maybe it wants to try and make another bull run, but Okay. You notice how nobody's putting an offer at 4233? Can name today's video frustrating. Yeah, that's probably what we should do. You notice that they'll get bids get put up there, but they're not getting hit either. Okay, that time actually an order went off. Okay. Well, they're not pushing down. They've just kind of been languishing down here in this area, but there was a short-lived attempt to pull it back up that didn't get very far. I am seeing slight steepening in the 2s and 10s. There was a little bit of selling in the 10-year, and over the past 4 bars or so, gentle buying. S&P 500 again, looking a little unhappy and giving up what was a really good rally. And here's Treasuries on the brink. Well, the 30-year went. It's a big offer at 12. So actually, you know, when you come in here and look at it, the bids below us look pretty thick, don't they? Okay. Well, you know, if I hadn't have given up on that on that longer term position in the treasury, in ZN, then we're only one tick away from where my fills would be. So maybe this isn't as bad as I thought. We are maybe starting to get a little steepening coming in on this again too. So like the best case scenario would be bear steepener. They move down and the 30-year moves down more than the others. And that's what I think I would probably expect to see happen if we were repricing interest rates for next year, because it was the 30-year that benefited the most earlier in the week when they started, you know, moving up so hard. So this, what we're getting right now, is more in line with the volume that I've been looking for all session, basically. Still some tough liquidity below us, though. So I don't know if it's that positive. So 5K iceberg at 10.5. Remember, there was like a large order there at 10.5 earlier as well. Like, I think that liquidity waiting to get filled at 10.5 has been waiting there for a very, very long time. I bet you that there's going to be some at 10 as well. Maybe if we get below that, things could get more interesting. We'll see. It's been a long time. It kind of looks like I might not get to find out, right? Okay, so now that they've ticked down, there was a 6K iceberg at 10.5, and there's a pretty big well, let's not say big iceberg, but there's pretty decent resting liquidity at 10. So with us coming down, the buyers are just all sitting there at the bottom like, eep, 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 eep. They want it. The little baby birds, they want it. They want it, and we can only hope that a hawk comes in and get dish. I feel that Jack Black has made many great contributions to society, but his greatest contribution has been gadoosh. What would I do without that? I just want that 10 to clear so that I can say, see guys, if I had just kept to my degenerate gambler strategy, it would have worked out. We are definitely getting a change in the volume in the market orders here now. And I think that getting this far below where we were at with the consumer or Michigan numbers or whatever it is, whatever we call it, is ultimately pretty foreboding sign. I wonder if maybe what happened was what had been driving us up until that point was mostly profit taking from the shorts. And then all of a sudden that flipped around to we were taking profit taking from the longs. And maybe now it's kind of all evened out, and we'll see if somebody decides to go and push it lower. Because if somebody was able to, if a large meta order did come in and shove it down through here, I probably would start to see a lot of market makers and so forth start to panic. Now, the buyer's cost base is just below us at 0.8 so that would be my first downside benchmark. Is that phrasing work for you guys? I don't like downside target because target kind of means I think it's going to go there, is going to go there. Whereas benchmark is just kind of like, that's just kind of an area that's been interesting in the past that maybe it gets there and it'll be interesting to see if it does, but we don't know if it will, and we don't know if there's anything significant about that price or anything like that. It's just a way for us to keep track of how far things have been moving. Nah, so we still haven't cleared 10, but I'm getting some better offers here. 10-year is lagging a little bit, so it seems like they're a little bit hesitant to hit the 10. Hey, you see, guys? If I had just stuck to my degenerate gambler strategy, it would have worked out. Right? And I would have my cost basis like way up here at like 16 or something like that. I shouldn't have given up on it. Oh, well. Oh, well. We also did see a few stops when they cleared 10. So that's good. It's not steepening anymore, though. It's flattening out again. The 5 years catching up and selling a little bit harder again. Well, we got about 5-10 minutes left, and there was something that I was, asked. I think that the answer should be pretty obvious now, but let's do the poll. Will there be a recession in 2024? Yes, no. Start poll. All right. Well, the first person that was willing to vote on the poll says yes. Why so pessimistic, guys? Really? Okay. Hey, 5K iceberg just breached through 09.5. Still big liquidity below us. There's 5K stacking there at 09. Well, 2,000 of it pulled. Those bids are trying to look a little menacing. I don't think that they're actually just trying to look it, though. I mean, look, it's 3K all the way through there. It's going to take a lot of selling to get through that. Maybe they do it, but I'm a little skeptical. Just a little skeptical. Maybe they convince more of those bids to cancel before they get traded, though. Man, okay, so there's 21 viewers. We've had about 6 votes. I'm going to let it go a little bit longer before I start going like, what the hell, guys? I think because I said I think the answer will be so obvious here that now you are all trying to do the counterintuitive thing and say, yes, there will be a recession in 2024. Obviously, I feel that this news suggests that we are much less likely to have a recession in 2024 than we previously thought. So you guys are going to have to explain your reasoning as to why you think there will be a recession in 2024. Can we agree there's probably not going to be a recession in March, right? If we do get one, it's going to be after the summer probably. What do you think about Hunter? Too little, too late? Yeah. I'm finding I'm starting to tune these things out because I just have no confidence that anything is going to come from any of the legal action anywhere. Not on the Trump side, not on the Biden side. I feel like this whole thing is just kind of turning into a real mess. I really wish that the people that were involved, like the DAs and everything, thought this through a little bit and considered the possible toxic impact this is having on our politics. And I feel like it kind of goes for the Biden thing too. Like, I think under normal circumstances, Republicans would complain about Biden, sure, but nothing would ever get done, right? Similarly, I think under normal circumstances, there'd be Democrats saying, see, Donald Trump is breaking the law. You should prosecute him for this. You should prosecute him for that. And nothing would ever actually happen. But it's changed. What has happened now is you've got these basically activist DAs everywhere, right? So on the split side, I would also argue that, that has been the modus operandi, that, somebody is doing something wrong like that, but nobody ever looks into it and it would just kind of goes by, that shouldn't be happening. So, like, maybe, I don't know. Maybe there are some aspects of it that are good, but I feel that the cultural impact that it's having is very negative. Okay, wow. So, the sellers did decide to breach 09. There was a big collision there. Oh, wow. And now they are hitting into 09 half, and that is iceberging as well. So a very surprising amount of volume traded there very quickly. I think that, well, I don't know. I think that could at least temporarily halt the decline that we've seen here. But let's give it a little bit, because sometimes what happens is they pump it up there and that's not able to hold it. And then next time it goes through 09, there's nothing there and then they can accelerate through, right? That can happen. That's actually, so we're like pushing the lows in cumulative delta for the day now too, by the way. So like somebody definitely sold it through this, right? I should also note that it was mostly in the 10-year. I didn't notice anything happening in the 30. And the dollar has been recovering, but did revert a little bit there. So maybe some of that iceberging was arbitrage with the dollar. We go by history, yes. There's still big bids below us at 08 half and 08. I don't know. I'm probably dead wrong about what I'm about to say. Like, I know that what I'm about to say feels a little irresponsible, but I feel like if I was a large meta order seller that was like, these interest rates are too high and I want to sell as much of this as I can, and having these guys putting these bids here, even at the lows at 09, 08 half, I would be like, that's fine. I can sell into that. Like, I'm going to get filled one way or another, right? But that's not the best situation for them, right? Has that stopped you before? No, it's never has. Never has, never will. Comes to my mind, I'm probably going to say it. So I was watching the Squid Game reality TV show yesterday. And there's this part where they do the game with the honeycomb, where you have to cut the honeycomb out, right? And the umbrella is the hardest one. And what they did was the first people in the line have to go into the room, the four of them, and then they have to decide who is going to do, which line is going to do which cookie. And they all have to agree on it. And so what happens is everybody tries to, make a call on, I'm going to do the circle or the triangle, and then one person is left out that basically has to acquiesce and take the umbrella. And everybody kept refusing to do it until they got to this this Mormon software engineer guy that was like crying in the line and like almost puking up the whole time while he was doing it. Like just this total softy, man. And he was the one that gave in. And I'm like, this is so fucking stupid. If I was in that room, I would be like, you know what? I'm not afraid of a challenge, and I don't care if everybody in my line is going to hate me. I'm going to do the umbrella because I think I can do it, and that'll just be less competition. And I'm expecting that all you guys that I just helped out by taking the umbrella, that you're going to have my back when these other people that I just pissed off are going to, you know, come after me, right? And I would just do it in like the most brazen, psychopathic way possible. None of this, like, if you're gonna have to do the umbrella, own it, dude. Don't be a baby about it. Right? That's me. That's how I feel about it. Still seeing pretty decent iceberging on the bids, but they're still pushing. I don't know, man. This is turning into some pretty large amount of selling. Wait 2 more minutes. I don't know. It's gonna be tough. It's gonna be tough. I want to keep going. I should check. There's not anything going on at work, is there? Well, no, we're okay. Still waiting on my pull request. Could be really interesting if they keep going, but the more absorption that you get there, the harder that's going to be, right? I don't know. Maybe the dollar will help them. Well, I guess the other thing I should say before we get going, because I do need to get going, is I Martin killed this, right? I took a loss, I took a slightly smaller loss, and then I came in and doubled up and made a win that basically canceled out my losses. Basically, I Martin killed it. I don't know. I mean, I did feel when we were getting that selling, I felt a lot more confident about it, and I really wanted to take the 2 contracts and everything, so... I'm not going to say it was completely just gambling, but there is some questionable things about it, and I don't want anybody to get the wrong idea about it. Yeah. But overall, despite that, it was still very frustrating, very interesting non-farms. I think that there's going to be a lot more interesting action next week, and we got a Federal Reserve meeting next week as well. And I still believe, though, that interest rates need to come back up by a considerable amount here. Well, they just traded through 09 with not a whole lot of effort. I bet it'd be nice if 08 half pulled too, but I doubt that's going to happen. But guys, I got to get going, so you just have to keep watching it. I'll probably take 1 contract off here at 41, and we'll see what happens. But I'll see you guys next week. In the meantime, stay